time for stock picks. On the radar today is Clicks, Southern Sun and 91. And joining me to break down the investment case for these counters is Talya Ginsberg from Umthombo Wealth. Talya, thank you so much for your time today.
Thank you so much for having me.
No problem. So we're starting in the retail sector, looking at Clicks, really a quality stock here, a defensive player within retail. I'm not going to give too much away and let you go ahead and take us through your analysis of that company.
Of course. So I chose today 3 distinct stocks from distinct sectors, but also very different investment cases. And so one of the reasons I wanted Clicks is for quality. So I'm hoping perhaps it will resonate with some of your viewers, or if you have viewers who just like putting things in the cupboard and just leaving them there, then definitely Clicks. It is a quality retailer, and then probably it's quite, and not just, you know, from what people experience it as a consumer. It's over the past 10 to 15 years, it's been one of the very few companies in South Africa that has consistently grown earnings. Our calculations say it has a CAGR 12% over the past 15 years, very high for a South African company. It's been able to then, with growing margins, margins and growing ROEs, the trend in South Africa over the past 15 years tends to be the other way around. So the fact that Clicks could buck that trend, it's quite impressive, which is why it demands such a demanding valuation relative to the rest of the JSE. But with that, within the valuation, it has come down a bit over the past couple of months. So I think if you want to own a quality share like Clicks, definitely now is your opportunity. And I think if the foreigners come back, the share that the foreigners own the most in South Africa, other than the mining stocks, is actually Clicks. And so if perhaps perhaps that could also happen, you'd get a nice tailwind from there.
And that was going to be my next question, right? The key word that you've mentioned is quality. And I wanted to go back to the update that we saw a few weeks ago that markets didn't really like, and we did see the share price under pressure. Within that environment, we also saw CEO Bettina Engelbrecht top up on some of those Clicks shares. And I was just going to ask you whether this now presents a buying opportunity.
In my opinion, it does. In my opinion, it does. And so hopefully she agrees with me. But yeah, so I think you're talking about that update that came in. I alluded to before their growth. I said it was an average of 12% CAGR. It was a bit less, their bottom line growth. And I suppose people do think, wow, there has to come a time where you just can't eke out anymore. And whereas for quite a while, Dis-Chem actually seems to be holding its own relative to Clicks. But with that said, a lot of people don't look at cash. They always look at and so the secret with Clicks and why its investors love it, particularly institutional investors, is just how cash generative this business is. And so I would be more worried about their cash flow statement or their long-term story than what's happened in the past few months.
A quick one before we move on to the next pick. You're not concerned particularly around the health of the consumer when it comes to Clicks' retail segment. We do know that segment really tends to go through a lot because of promotional activity as well as competition. You mentioned Dis-Chem there.
Yes, so where I am a bit concerned is that I think Dis-Chem, as I said, they have upped their strategy the past few months, and they have had a lot more promotional activity. They have this new kind of almost club card, if you want to call it. Which is great. I think competition is great for the economy, but from what Clicks does, which Dis-Chem doesn't have, is Clicks generally uses what's called private label. So they have their own brands, if you want to call it that, which means they get better margins for themselves and it's cheaper for the consumer. And then what our data is showing us is also that what's been quite resilient in South Africa, you've probably even seen with the likes of Woolworths, etc., is this beauty, trend, which, both Clicks and Dis-Chem, I suppose, cater to that.
All right, let's move over to your next pick in the hotel spend, more so that discretionary spend, right? you're going for Southern Sun on that front. Take me through the investment case.
Southern Sun, if you can't afford a nice holiday, maybe you can afford Southern Sun shares.
And listen, in a few years, you might be able to afford the holiday.
You know, you and I are thinking exactly alike. But I suppose just from a top-down perspective for all the hotels, is that we've seen in South Africa, the tourists have been coming back here. We're almost back at 2019 levels, if not exceeding that. Cape Town has just been doing fantastically. And if you look at the millennials, Gen Zs, that generation, it's probably the generation that values travel the most in history. So you do have that. And then, of course, South Africa is changing its visa laws with China, India, etc. But if you just look at Southern Sun itself, while we really like it, we think it has a fantastic portfolio, high quality buildings, a good management team. And the thing with hotels is a sort of operational efficiency, that there's this magic number that when they get a capacity of about 60 to 65% full, a lot of their expenses are covered and they suddenly get pricing power. And so a company like Southern Sun, we could see more pricing power. This could mean that they could grow their earnings, grow their payout ratio, which would also mean that there could be a re-rating from the stock.
Okay.
And so we like that theme at the moment.
So perhaps get in now before we see that re-rating coming
Yes,
through.
exactly.
Right, you mentioned there, tourism is booming within the country and suggesting that it could be sustainable moving forward. I want us to look at the Gauteng area in particular. You touched on Western Cape, which is booming. We do know that. What have you made of the recent acquisition within the Gauteng province, right? The group has moved to hop onto a controlling stake in the Sandton Convention Centre and Sandton Towers, penetrating that Sandton area and also right on the top of a key retail asset, that being Sandton City.
Yes, so that would be a different kind of tourism.
Yes.
At Johannesburg, when we do get tourists here, it's either business tourists or, quite frankly, people that want to go to Kruger Park.
Making a quick stop.
Yes. But it's a good business area, and other than that, it's assets that they know, they understand. They've operated in those buildings before, so they understand the assets well. So generally, we're a bit more skeptical of M&A activity, but for this, we think it could be constructive.
Yeah, I mean, as you mentioned there, they've operated, they've acted as an operator of those buildings before. So I guess it's just sort of just solidifying what they've already been doing over the long term.
Exactly.
Let's move over to your last pick, that being 91 asset manager in the space. Take us through your analysis there.
91. So this investment case is perhaps a bit more technical. And so if you've seen over the past year, for the first time in possibly over 15 years, emerging markets have actually outperformed DM markets, developing markets. And our data has shown that generally a weaker dollar tends to be good for emerging markets, which is what we saw last year. And so we believe if this emerging markets buoyancy continues, people, particularly other institutional managers, will put their money into active managers. And generally for the US, etc., people tend to go passive, but perhaps for something they're less familiar with, it's very likely they'll go into active managers, which if you look at 91, particularly also with their deal with Sanlam Investment Managers. They're big, they have a big presence in the UK, overseas, etc. So we think it's very likely that funds would flow into 91. They'll benefit from this theme.
And is that a long-term view on 91? I'm just considering how cyclical and how volatile in nature views around emerging market and emerging market currencies is. Yes, we are seeing that uncertainty and the rotation out of developed markets, particularly the US, but just your sense around that.
I mean, I'd say medium-term view for now. I can't call what the markets will be like in 10 years' time. I think very few people would claim to do that.
Yeah.
But I think it's also medium-term. And look, a lot of the easy money has been made in 91. But I think there's still money to be made. And even if you look at its price, its valuation relative to its AUM, I think it's actually very conservative, especially when you compare it to other global asset managers.
All right, then let's leave it there. Thank you so much
Thank
for
you.
your time and taking us through those 3 counters. That was Talya Ginsberg from Umthombo Wealth.